recorded as well. So we're just doing some training with Miss Jennifer here on a new home in flood, and right now we're just Jennifer. She printed out, which is a great idea, printing out the fact finder in case you're just meeting with someone. And actually, on that note, I'll even I'm going to email you guys. I do have these in Word. Like I have just Word documents of these, and on our Dropbox file on here is where our all of our different fact finders are. So if you're ever, I always say to people, I don't really care how you get the info so long as you get it, right? Some people like paper, some people are more computer oriented, but this is, are you more paper? Okay, great, and that's fine as long as we're getting it. Now I will say, and again, I would recommend still once you get it, I'd still put it in, like you get it in paper, I'd still put it online because now you have a good place to keep it, go back to it, you can search easy, things like that. So we'll send that at the end, but there's nothing wrong with paper. So anyway, we were just kind of filling out the fact finder, so we do have a track on it. And if we don't have all the info that we need on the home, really the next step, we would go to property appraiser. So Holiday's in Pasco County, I believe. And really any county in Florida and most counties in the country have a property appraiser website. It's all public record. And this is really a lot of times where like Zillow or Realtor.com gets their info in part. So we'll just go here. You normally do by last name depending on if it's a very common name or not. The address is obviously going to be the most accurate way to do it. So we'll just plug in the address here and click submit. And so you see here they're going to pull up the home. This is also good too because you literally can see who owns the home if it was in like a trust or something else. And then this is going to be the record of the home itself. Okay, so we see here, right here, this FEMA code. So this is a good indication too. That's showing that it is in a flood zone. So we already know she was interested in flood insurance. So we'll talk about that in a second. And then here's going to be the info on the home. So it was built in 1970. It's concrete block construction. It's 1 story, 2 baths, and this shows you your living square footage is about 1835. We don't count the garage or the open porch. We really look at heated square footage, right? So in terms of filling out our fact finder and saying, well, what was the square footage, we'll put 1835. Okay, we also know it's block construction. We know it's 1 story. Do we know who she's with right now? Carrier? So no insurance currently. Great. And I say that in a way because now this is a pretty straight shot, hopefully for you. Is she a friend, Jennifer, or just someone you know, or she's a friend? That's awesome. So, and even better. So obviously, it should be definitely a straight shot for us, and I'll kind of explain what we'll do in a second. But if we had the carrier info, we just put the carrier info in, renewal premium, pricing, etc. Number of beds and baths, so probably like a 3-2. Roof covering, so here, and it'll typically show you here, depending on property appraiser. So you can see here, like roof covering shows asphalt or comp shingle. So it looks like a shingle roof. Now this isn't important. Did we ask how old the roof is when that was replaced? So she's not sure how old the roof is. Okay, so that is definitely a big item. And again, there's always a way in our industry to get something done. It's a matter of where it's going to fit. Part of what we were kind of talking to you guys the other day is sort of like, we talked about the idea of you're collecting clients, not to make it sound weird or anything, but collecting clients. And the other thing we've kind of said in the past is some of this stuff's like a puzzle, right? It's, you're just kind of putting a puzzle together a little bit. So on here on property appraiser, most property appraisers will also show this is the history, this is sales history. Sometimes on the property appraiser, they will actually show any permits that have been pulled. And so sometimes, now it looks like each agency is a little bit different, so it looks like there may be a separate one for that. I'm not going to, monkey around just for sake of time with that a lot right now. But for Pinellas County, for example, definitely has that, and other counties do as well, where they would show you permits. So that would be the type of thing if, let's say, and a roof is a permitted item, if it's done, properly through the county, It's the type of thing, if maybe somebody didn't know, but you see a permit here, you would have that evidence or proof to be able to show the insurance company. Because a lot of the insurance companies want to see shingle roofs updated within 15 years. Okay, so we're just going to put question mark for now. I'm just going to put no on flat. What about any other ideas on updates to heating, electrical, plumbing, and okay. Mm-hmm. Okay. Okay, so we're not sure on those. Good. Okay, great. And she hasn't had any claims, right? And there's no, I don't think there's a pool there. Again, that would tell us typically here, no pool there, right? No fireplace. Now garage does look like a 2-car attached garage. It's a 1-car, okay. What about any animals? Okay. What type of animal? They have Dobermans. Okay. So, and that's important as well. And again, in terms of asking the questions, this is a good one. This is a good one to look at. Because Dobermans are definitely fall into kind of that aggressive breed dog, right? You know, Dobermans. So we'll look at that in a second. What about any alarm? She does have a monitored alarm? Yeah. Okay. Good. And we know she's in a flood zone. Okay. No DUIs, bankruptcies, anything like that. Correct? No. Okay. Did she ask about jewelry at all and have any need for jewelry or anything? Okay. No. Okay, great. Well, good job. It sounds like you asked a lot of questions. That's really good, Jennifer. That sounds like you did a pretty thorough job. I can't stress enough, just as you guys are getting going. And really, I tell even our experienced team members, the more questions you ask, the better you're going to be able to do for your client, the more you're going to learn about them. It's always a good thing. And so I'm just going to click submit here. And I just want you guys to kind of see what happens. So basically, when that's submitted, it's then going to kick out an email, and you would get that emailed right away. I'm going to forward this to you right now. Okay. The other thing, and I'll show you guys this in a second, but we have a preset just kind of follow-up funnel and some info that they'll start getting from us, and I'll explain that in a little bit as well, but I'll just send you this so you've got it in your email. And again, I can't stress enough how helpful for me it's been. You know, picture where you've got all these in your email, and maybe you create a file that says like new leads or prospects or whatever, and it's just an easy place to search. Okay. So now let's just we'll talk about the homeowners and, you know, what does this look like and where is this going to go? So one of the first things I'm going to do here is I'm going to go myself to our little underwriting guideline. So we've talked about this in the past that we've got, and I know I've sent it to you guys. I believe I have. I'll certainly send it again. We've got this quick reference guide. And the whole goal that we did with this quick reference guide is trying to really understand what the different carriers' stances are on a whole host of different things, right? Now, one of the biggest ones, if we go right here, is the proof of prior, okay? There's not a lot of companies that are okay with no proof of prior, right? So a lot will say if it's been within 30 days, okay. Citizens is the state-backed insurer, and really like the absolute last thing you want to do. Now, Federated will do it. They'll do it with a surcharge. 45 days here, 90 days for Olympus. So Universal historically is one of the carriers that we know is okay with that. Then we also have, and really this is a good example to see because there's like 3 things right now. I've been doing this a long time. If I just look at this real quick and say, okay, how are we going to get this solved for Michelle? So she's got no current coverage. She's got a Doberman, and we're not sure about the roof, how old the roof is, right? So these are all items, again, that we do have on our update here on our list. We would be able to run proposals. We would definitely need a 4-point inspection to move forward because almost all the carriers, if you look here, are going to say that they want a 4-point anytime you're over 40 years, especially when you're over 40 years. Some are going to say 30, Okay, some will say 20, but pretty assuredly you're going to need a 4-point if you're over 40. Okay, and so the home built in 70, you're at 49 years old. Okay.
And what can I tell her? If you had said before, like a rough estimate of how much those are.
Yeah, so those run typically to do a 4-point and a wind mitigation right around $100. And again, I'd really recommend, Jennifer, as you're building everything, is get plugged in with a good inspector. You know, try and look for opportunities to kind of network there. So what I'm going to do now is I'm just going to, and again, for the sake of kind of training and everything, and I also want us to be able to do the flood and want to be mindful of everyone's time. I'm going to go to Easy Links, kind of show like next steps of what this would look like. Okay. So we got the info in there. I'm now going to go to Easy Links, and we're going to input the client. Now, again, in theory, you could certainly go right to Easy Links and get a fair amount of that info. I just like that the fact finder is a very clean and easy spot, and you're not fussing with a bunch of different screens. It's all on one thing that you kind of just flow through. I think for me, it just makes it a little easier. If you want to just go right here, that's fine. But ultimately, we want to get them into Easy Links, because Easy Links is really what allows us to run the quotes, and especially allows us to run, you know, different carrier quotes, multiple quotes. So we're going to go in here. We're going to go create new applicant. And what just happened there? I don't know why that's weird. It just like kicked me out. Okay. So once this loads here, you're gonna go to the left, create new applicant. Now, again, I realize some of this is a little repetitive. What I'm just doing on my end is I'm pulling up the email that I have so I can easily input the info. Okay, and obviously that would say your name. And then we'll go create new applicant. Okay. And this is, do you know her date of birth?
September 16th, 68.
Okay. And really, I always say anything that's in red, you know, the system's going to make you fill out. I must have a window open that I can't find in terms of closing. So we'll just go here, and I'll try and find like the closest thing to what they would do. So let's say maybe that's kind of like non-profit type. Maybe put social services, and then I'm just going to put, we'll put that. Okay. All right, and then because my email was giving a hard time, I'm going to go back into the property appraiser, and I'll pull her info. What was the address again, Jennifer?
3016 Palomar, C-A-L-A-M-O-R-E.
Yep. Got it. Okay. Got it right here. Just plugging this in here. We'll click validate for the address, go through the county, and the cell. What was the cell again?
727
Mm-hmm.
710
Mm-hmm.
4891.
4891. Okay. And what was the email? Sapphire with an F.
019 at msn.com.
Perfect. Okay. And I'm going to put Randy, Cole, and Mary.
I didn't ask for all his information. I don't know his birthday.
Yeah, that's fine. Don't worry about that. Now we're going to click Save and go to Home. We don't use a template for homeowners. Now we're going to check policy form. HO3 is main home. That's where I live in it. I'll just put like primary home. Here's the different carriers that we have access to quote through EasyLinks. So we've got 8 companies here. We do have another system called Quote Rush that has other companies that don't pull through on EasyLinks, but for now, we've got plenty of companies right here, especially knowing that Universal is probably going to be really the one that we're going to work with because of the no proof of prior. We're not doing a package. In terms of effective date, I normally would, I mean, again, she's an example where it's like they don't have any coverage. They could certainly do it right away. Otherwise, it would normally match up with whenever their expiration date was. If they were trying to do it at renewal, or if they wanted to move early, you could make it really whatever date you want. You could put it a week out. We'll put, has property insurance been canceled, blah, blah, blah. No, it hasn't. Home's not under construction, no swimming pool. There's no mortgage on it, right? They own it outright. You said she paid cash.
Yeah.
Okay, prior carrier, so we're putting no prior insurance. And I'm just going to put did not insure. We do have dogs. There's no daycare. Again, I'm just answering everything in the red arrow. And then I'm going to go next to dwelling. I'm going to click this and say pull it up. That would be if it was a different address. Okay. If it's not, protection class is normally going to be 2. And distance to the fire hydrant is normally going to be anywhere from 600 to 1,000 square feet. Protection class has to do with how far it is to the fire department. And most everything in our area falls within that. The only time you get higher, the higher the number, the further you are. The only time you get further is if you're way out in the country or something like that. Okay. Exterior walls, so this is where we're just going to put stucco on block would be probably the closest one. The roof type, we'll put asphalt shingles. 1 family. For the most part, I'll just put ranch for a lot of the Florida stuff. Again, primary. And then year built. We said 1970. Square footage, 1835. 1 story. Now the roof shape. So let's talk about this for a second. So one of the things I'm going to do now is I'm just going to Google the home, right? So keep in mind there's so much info. Part of the advantage of our industry, there's so much information you can just get online. So I just went to Google. I just Googled the home. And you'll see the address. And so here's a picture of it. And again, kind of interesting. So if you look at this here, that's a good example of a hip roof. A hip roof is going to be anything that kind of slopes down like a pyramid. Now, this part here, and sometimes it's kind of hard to see, depending on what kind of...
There's no roof on that porch there.
There's no roof on the porch. Okay, so that's open, yeah. I see what you're saying. So I'm trying to kind of scroll around here to see. So that definitely looks like it's hip. Now this part here looks like it's flat. So again, kind of tough to see. And there's we probably could do, again, for sake of time, I'm not going to monkey around with it too much. You could do a satellite view on that or all that. So what I'm going to do for now is I'm just going to put it as gable. And the reason being, hip gets you a discount. Hip holds up better. Now most carriers will tell you if any more than like 20% of the roof is gable, it's not going to qualify for hip. So the vast majority of the roof has to be hip for it to qualify. And it may, but right now we'll just show it like this. Wind speed would be if they had any impact resistant glass, or hurricane shutters. Foundation type is going to be a concrete slab. Heating is typically going to be electric. And then updates. And again, we're not 100% sure for now. I'm just going to put that we've had some updates. We'll just assume some normal updates. Most roofs, and you can kind of tell, I mean, that roof looks like it's in pretty decent shape, right? It doesn't look, just looking at it, again, you wouldn't say it's like, oh, that looks, really, yeah, it doesn't look like a, some kind of a really bad roof or anything like that. You can also see some sort of historical pictures of it on Google Earth, depending on what's going on.
Well, I didn't know that.
But yeah, so if you look here, this is what it looked like in like 2011, and because they go by from time to time to update the pictures. So we'll just assume, and again we said a lot of the things she had done in the last 5 years. So we'll assume that. In terms of the roof, and again, I'll just assume like maybe the last 10 years. So we'll say maybe like 2009. That's definitely something we'd have to get verified, but for now, we just want to get a quote. I want to kind of see where we're at, what things look like. The other thing that we need is the purchase date. Again, that's something you can get off a property appraiser. And it looks like she bought it in 2014. So
Yeah, April 26th.
2014, perfect. No, you did a really good job getting all those questions answered, Jennifer. That's good. Okay. So here we're going to go in terms of dwelling and coverages. Now we're going to do a replacement cost estimate. I'm going to show you that in a minute. I would say it's just a very rough rule of thumb. Like very rough rule of thumb, you could use about $125 a square foot. That's what I'm using right now. So I'm literally just taking the square footage of the 1835 times 125, and that's where I'm getting 230. Okay. And again, I'm going to show you where we would do a formal replacement cost, but for now, I just want to be able to get some info in the system so we can at least get a proposal and really let EasyLinks do a lot of the heavy lifting for us in terms of running the proposals, right? That's kind of the magic of the system. In terms of the deductibles and some of this that I'm filling out here, personal liability, I always do 300,000. Medical payments, typically always 5,000. All other peril deductible, the higher the deductible, the lower the premium. So I'm putting that at 2,500. And you know, the thought there is, again, the higher the deductible, the lower the premium. If someone was like, oh, that's too much out of pocket, you could certainly lower that to 1,000. But in general, I would say that going from 1,000 to $2,500 deductible is one of the most practical things most people can do. And that will typically save you $200 to $300 a year.
Okay.
And so that's definitely a good thing for most people. Okay. Then down here in terms of the credits, we are going to put the burglar alarm. We'll put that it's in it. And to be clear, it's a central station, so it's like monitored by an alarm. Did you ask her that? We're not sure.
I didn't.
Okay. So we're not sure on that. Again, some of these things we just kind of have to tighten up a little bit because there's no doubt a lot of people today have where they may have cameras and they may have other things, but it's got to be a central station alarm. It's got to be the idea that I set the pin pad. Doesn't matter what company. It could be any company, but it's got to be monitored on some sort of a monitoring contract. So we'll go ahead. We'll assume for now that it is. We'll give her the benefit of the doubt. I'm feeling generous today. Okay, and then so here's any endorsements. You know, not a ton I normally pick here. Water backup, I normally do. We talked about this in another training. 5,000 is normally the what most companies will allow up to. And that is if your toilets or sewer or your toilets or sink or shower to overflow with coming up literally from the sewer. Always want to also do replacement cost on contents. Replacement cost on dwelling automatically happens. So that's automatically included in there. Building alteration, we'll just go through real quick. Building alterations and additions, that's really for condos only. Identity theft, it's coverage that people can put on their homeowners. It's not something we do a ton of. You certainly could. These are different increased coverages for credit card, jewelry. Again, not something I normally do. Increased mold, loss assessment, ordinance and law. Again, not ones I normally do unless someone's got a really specific question or concern. Most policies are going to automatically include anywhere from 10 to 25% of ordinance and law. And that is, so I don't normally monkey around to increase it, but that is if you have a claim and you have to go and get new permitting because of the severity of your claim and the county codes have changed and you don't have enough money in your coverage to keep up with the county codes, you've got an additional 10 to 25% of coverage of ordinance and law. This would be if there were any claims. Now we're at the carriers. And now I'm going to click on refresh. So it's saying applicant data, something needs to be fixed somewhere. So what didn't it like? We don't have a date of birth in because I put the husband. I'm just going to make something up for now. Okay. Again, I can't stress enough. Don't let the little things at first hang you guys up. Goal is going to be, again, just making sure you're getting enough info into the system so you can start to do proposals. Okay. So I'm going to click back and do the save and go to home. All that info should be in there and saved. So now I'm just going right to finish and seeing what else does it not like. Okay, time and address. So I'm going to put 5 years, put save, do the save and go to home. I would go finish. Now keep in mind we're doing, the carrier tab has not been visited. It wants carrier tab here, okay. So the system is definitely pretty good at telling you what it wants if you haven't done it. And now, and it's kind of, you know, color coded, red and green. So obviously green is good. You don't need SSN. Okay, we don't need that to quote. Now I'm going to click submit to carriers. Okay, I'm not going to run any different options because on Easy Links, the only other options they're going to give you are deductible and liability, and that's not something that we normally change a ton of. So this, I'm just going to click continue. And now it's going to show you all the different carriers here. Okay, and now we're going to click submit. Now, I'm going to tell you what's going to happen. A lot of the carriers are probably going to kick out right away and say no because of the no proof of prior. And that's okay. And some of these failed or error messages that we're seeing are probably just because of that. Okay, now if you look, Universal did return a quote, and we know for a fact that they will do it. And with no proof of prior. So in general, what we know, again, as I shared with you guys, just when you first kind of came on board, our average premium in Florida is about $2,000. Keep in mind that's average. Some's higher, some's lower. So that's already coming in at $2,900. We'll certainly take a look at that in a little more depth. But again, most of these are going to be erroring out right now because of that. So I don't know that I'm going to hang on a whole lot just for sake of time with this. But let's assume that that wasn't the case and all of them returned you proposals. Again, your power of working with us and going to your clients is now saying, hey, Mr. Client, I've been able to show and shop 10 different companies and here's where we're at, right? Now it does show that Heritage returned a quote and they came in at $2,200. Okay, so couple things. So I am kind of curious. I'm going to go back to my little cheat sheet and see if Heritage is on here, and they are. And actually, so that's a good point. So Heritage is showing they are one of the carriers that will do it with a surcharge.
Okay.
If you see that there now. The other thing that I want to highlight, this is a big column too, this water damage exclusion, and this comes in a lot on older homes. Again, we talked about this a little bit in training. And you'll notice a lot of the carriers automatically do this. And so what this says, water damage exclusion is, a pipe breaks and causes a flood in my home. My washing machine overflows. My hot water heater overflows. My dishwasher overflows. I forget to turn the water off. I did this like 3 years ago, 2 years ago. We have a water pitcher that we normally fill up, put in the refrigerator to keep cold. I turn the water pitcher on to fill the water pitcher up. I get busy with the kids and all that. I forget, and it stays on like all night. Not fun. Huge mess. Water all over. Had to get dried out. There was a little bit of mold that had to get taken care of. On and on. That was covered under my homeowners. I joked, stupidity is covered. I had someone tell me a long time ago, stupidity is covered under your policy. It can't be like malicious, it can't be a, what's the right word? Yeah, kind of like malicious intent, if you will. Purposeful. But stupidity is covered. Anyway, so this water damage exclusion is a big deal right now. Now, Heritage is saying, look, we'll do it between 40 to 50, assuming our sheet's right, between 40 to 50, you're eligible for it. If it's over 50, you're not. That limited means they will give you 10,000 of coverage. Now, Universal will be one, and they are one of the few that's left. If you look on our sheet here, there are only 3 out of the probably 12 carriers we have on here where it says none in terms of saying water damage exclusion. So in other words, there's not a water damage exclusion. They would offer full water. So pipe breaks and causes a flood, and it's a $50,000 claim because the person has hardwood flooring and on and on and on. They'll pay up to $50,000. Okay. So the next thing kind of that we would look at here, and again, just knowing more about the file, and we'll do, I'm going to click, you'll see most of these are going to have these little easy login dealies, right? So I'm going to do it for both. We'll click the easy login for bridging over to Heritage, and hopefully the systems are set up and working. If not, I'll just log in with my own RoboForm login, and we'll go here, Heritage, okay. And so a couple things when we get in here, here are the quotes. And we'll see here. So I'm just typing in her name. This is homeowners, search. Okay, so here's the quote we just ran. Because keep in mind, what EasyLinks does is it literally is running the quote on the actual carrier's site. And so we can see the info here that just, again, transfers over. And, okay. And you can see here, it's some of the carriers are good about already giving you inputs or things that are going to be needed. So it's saying the 4 points going to be needed, right? Greater than 40 years has the water damage exclusion, and underwriting is required. So we'll have to take a look at that a little more closely with regards to that. Some of the things, for whatever reason, distance to fire hydrant didn't fill through. So we'll pull that. Now, the other thing that's important, some of the carriers do credit. Now, when I say they do credit, they don't do a hard hit on your credit until you actually go to bind. So this is basically assuming she's got very, very, very good credit. Now, we don't know what her credit is. It's something, you know, can be a little bit sensitive, if you will. It's probably going to knock it down a little bit just to kind of be a little more conservative and see what, you know, what that looks like. But there is no doubt there's a strong connection that the better credit people have, the less claims they have, and the better they pay their bills. So that's, you know, definitely something that's pretty time-tested and true. So now moving forward here, let's see, it's not, Smithfield is not, okay. Okay. I don't know what field it's asking me for right now that it's having a problem with, and again, for time, I don't want to spend too much time holding us up. What I want to do is just say normally you'd walk through screen by screen and you would be able to get a formal proposal to finalize out from the actual carrier. The other thing that I want to do now, and we looked at this a little bit before, I believe, but is I'm going to pull up the guidelines for homeowners, because the other thing that we needed to look at was the dogs, right? So if you remember, we talked that there is a, she's got a Doberman. And so things like Dobermans, Pit Bulls, Akitas, all those, some carriers have an issue with certain types of those breeds, and some don't. So I'm going to look at the forms here and look for something that's kind of, you know, underwriting guideline, or at some level is going to give me some more info on what kind of guidelines here for Florida. So program changes could be one. Let me see here. And each of these carriers is going to have one. The other thing, and I recommended it to you guys before too, but you can always call the company directly. And if you call the company and get on the phone with underwriting, I would always ask them too to show you in, you know, where would it be found online. But right here is an ineligible guide, and here is a quick reference guide. So I'm going to look at both of those just real quick to kind of give us an idea and see this ineligible risks guide. Okay, so liability concerns, validation, drawing. Okay, so nothing specifically came up with regards to dogs here. Here we go. But under premises conditions, what do we see right there? Doberman. So, and here's the scenario where all this plays out. If we don't ask that up front, and I always recommend to people, at the very least, you want to kind of find out, have they had any claims? Do they have any dogs? At a minimum. Now, again, going through the full fact finder is going to allow you to have more info in the home, but let's say you don't ask a question like dogs, and you get to the very end, they're like, oh yeah, I have a Doberman. Well, you know, now we're going to have to go a different direction. Or what ultimately could happen too is, let's say you write the whole policy, and the company goes out and inspects, which they have the right to do, and a lot of these companies do go out and inspect. They see the Doberman, and then they get a cancellation notice, right? So that's where it's definitely a good idea to just kind of, look through some of these things, right? So now, and again, some of this shares similar things, dog liability, kind of giving some indications on some of the things that they want. Again, roof requirements, so we just talked about that. So comp shingle, they would want 15 years and newer, depending on it. It also looked like there might have been a little flat portion of the roof. And a lot of companies typically don't want more than 20% over. So honestly, this is a really good one to work on because it's got a lot of moving parts to it that you kind of have to understand, right? So what I'm going to do now is I'm just going to go back here and go into Universal. Excuse me, hopefully this bridge is over. And then, well, that was nice. It took me right to the proposal. I will say Universal is probably one of the easiest carriers we have to work with in terms of the website. The other thing I'm going to do, and I mentioned it here, here's the replacement cost calculator. Now, a lot of times the replacement cost will pull through, okay? Or they will pull, I should say, they will pull the info from Property Appraiser directly, right? So if I click and edit this, if you recall, and here's the actual input. So year built, square footage, just standard quality. Now this is where you've got some play. If it was really above average or customer premium, those are all going to add more value to the property. And again, this is just a very standard home that you see in Florida all the time. And so this is coming in at 244. And again, I think that when I did it, we came in at 230. If you recall, I did about $125 a square foot. So really pretty darn close there, just in terms of a very rough price per square foot. And this is a nice thing that you can always do. And again, I think some of this always adds value, and it shows your client that you are taking the time and you're looking through things and all of that, is you can send them this report, right? So I'm just going to save this here. I'll save it to like my desktop or data transfer, and I'll just call Cole replacement cost estimate. Now I will tell you, and I'll just put the carrier. Every file we do, we have to have it because the carrier requires it. So we can always go and start with easy links and just that, kind of price per square foot about 130, about 125. But ultimately, we're going to have to pull that through from the carrier. Okay. And as you see, that already did. So we're just going to continue use that. You'll see some percentage standards fall through, 10% for other structures, 50 for personal property, 20 for loss of use. This is if I'm displaced from the home due to a claim. So there's Hurricane Jennifer comes along, I can't live in the home, I've got a pot of money to rebuild my home, I've got a pot of money for my contents, which is right here, and now I have a pot of money to live somewhere else while I'm rebuilding. Okay. Liability, slip and fall, something happens. Medical payments, the most Universal does is up to $3,000. You see here the replacement cost on contents. Okay. You also see here the ordinance and law, 25% is included. Okay. Now the water backup didn't pull through, so that's okay. So this is always why you do need to kind of look at what's on the actual quote. The rating tab, again, most of these things are automatically pulling through. This wind mitigation, I'm going to take this off for now because we don't have really any info on that. Okay. On the roof, and then we're going to go back to the premium. Okay, so now you see, and probably because we did the change that wind mitigation a little bit, that's coming in at 3133. What I'm going to do now is I'm going to print this, I'm going to save it, and if I can save it here, and so now I'll just call it Cole Homeowners Insurance Proposal Universal Property. Okay. The other thing I'm going to do too is I am going to verify, and I'm going to go, and I know we looked at this the other day, I'm going to go back to the main page here. I'm going to look for a very similar form that we found on Heritage, and to me this is a little more clearly laid out binding guidelines. So looking at the binding guidelines, and again, well, actually this is American Platinum, so I got to pick the right binding guidelines. American Platinum is their high value carrier. So this is for Universal. I'm going to put the binding guidelines here. You can see right there. And I'm just going to right click or do Control F and see if anything comes up. And it's, oh, here it is. It's coming up. I'll put my little screenshot over here. It's coming up here, and I'm just going to start typing in Doberman. Okay, so that's good that it didn't find Doberman, but let's see under dogs. Okay, so dog came up a few times, and here are the list of dogs that they will not do. Now you can see their list is smaller, right?
Yeah.
So chow, pretty blah, blah, blah. So that's good news. So they will do that, okay? We already know that they will do no prior insurance. We know, kind of looking through here, roof, okay? They want the roof to be 20 years and newer, okay? Now, again, the box, and I know we ask it, and it's such a goofy thing because it's like, who in the world knows their electrical box, right? Like, you know, some of this stuff you want to bang your head a little bit, but there's a reason why. I was joking with somebody the other day. I'm like, you know, a lot of this stuff insurance companies do, it's kind of like your mother, right? It may drive you a little nuts, but there's normally a reason behind it. And the reason being, these boxes in particular, like if you Google any of these and fire hazard, and again, we may have talked about this before, will typically have a much higher risk of starting a fire. So if they don't know for now, we'll just assume that they don't have one of those boxes. If they did, they would normally give, the carrier would normally give like 30 days to update, okay? So in terms of the rest of it or anything else, hip roof, you can see here they want pictures. Typically the wind mitigation will show that. 4-point, they went over 40 years old, right? So we kind of knew that as well. And I think that's about it. Again, and this is plenty because there's just a lot of moving parts with this. So, you know, at this point, really what I would do, and so long as you're okay with it, what I think would make sense is I can email Michelle and copy you on it and just say, hey, Michelle, I know you've been working with Jennifer, who's new to our team, and we'll kind of tee it up like that. And then that way you're a part of it. Again, we'd certainly bank it if we do it. But since you're not licensed yet, you know, we do just try and watch that. Like when Danielle was working with you, I was working very closely with her behind the scenes, right? The other thing that I am going to do here, just so we can kind of see a difference going back to this, because listen, I don't know anything about your friend or what she's in her mind thinking this is going to cost, but you know, I'm well aware that that's $3,300 is expensive, or $3,100. So what I am going to do is I'm going to go back here, okay, and I'm going to look at a couple things real quick. So I'm going to go under the coverages. Now, there's really not a lot of play. We can't really do anything with the dwelling. We could take the hurricane deductible up. I'm not a huge fan of that because it doesn't normally save me a lot of money, but I want you to at least see it, okay? If you notice, $2,500 is the highest we can go all other peril. So I'll just go and say, okay, if we kept everything else the same, we go 5% hurricane, only saving me about $100. Didn't really save me a lot, kind of as I was saying. So to me, that just doesn't make a lot of sense.
Yeah.
We could do and say, well, if I take replacement cost off on contents. Now, I like replacement cost because it's good. It's going to give me more, better coverage in the event of my contents being damaged. But it's also an area where it'll save us some money. Now, if you look, that saved about $400. Okay? And then we also have to look and say, well, right now she's got no coverage. She's had nothing, right? And I joke, oatmeal's better than no meal. So you want to kind of think along these lines as you're talking, and just hopefully the way you've seen so far, I interact even with you guys, just very straightforward, very practical, just kind of thinking like, hey, where is she at? What is she thinking about? You don't know, you know, all the ins and outs, nor do I, of her life and bills and all that, but it's just kind of presenting a few options and saying, here's some things to consider. If price was not an issue, obviously having replacement cost, on and on, that would certainly be preferred. So what I'll do is I'll print this, and I'll save this, and I'll just call this call homeowners insurance, and I'll just put no replacement cost on contents. Okay. And again, we'd still certainly have a few things to tackle in terms of updates, inspection, wind mit, all that. The last thing that I would highlight here, though, again, if neither of those were an issue, Some of the carriers do allow you to exclude the wind. So if you look here, you see it literally says X wind. Now watch what happens here. So you're going to see the rate will come way down. Wow. I mean, that says a lot. Oh, wow, I was right. So that's pretty incredible, right? So basically now they're saying, okay, guess what? We're only going to charge you $527 for the year if you exclude the wind. So again, say again?
Is that putting replacement costs back in?
That's a good question. Normally it would show up here as a line item if it was, so no. That is a good point. I will add that back in. Let's see here. Only change it to $595, and even I'd be curious, okay, if we did it even with a lower deductible. So even at $1,000 deductible, lowering the deductible with the idea that, like, okay, that all other peril deductible becomes very important because that's really the coverage that she's got. $677, to me, this would be like a no-brainer. Like, at the very least, if I'm Michelle, I should do this. Now, what it also does tell you is how high the risk of wind is because of how much they're charging for the premium on it, right? So it's definitely one of those things, again, in an ideal world, you would certainly want her to have the replacement cost, want her to have the wind. Take the premium out and what you're making and all that. You know, we want to talk about serving our people, serving our community, helping out, and knowing that it would not be fun if this summer's a bad hurricane and she has damage and there's no coverage and she just took insurance out but saved, you know, $1,500. But we also need to be practical, you know, and understand that, you know, people have budgets. Maybe she can do it, maybe she can't. I don't know. Okay. But at least, like I said, you'd have coverage for fire, pipe breaks and causes of flood. We talked about that, and knowing Universal doesn't have a limitation there. Vandalism, theft, a truck runs into the building, a lightning strike. So there are quite a few things that fall outside of the hurricane, right? Liability, etc. So we've got a few different options there, and we can kind of talk about next steps with that. So I want to be able to do the flood with you as well. But before we move on, any questions on like what we walked through or what we looked at?
No, but about the wind, what's the difference between the wind and the hurricane and the flood? I mean, oh, the flood would be water. Yeah, okay, never mind.
Right. So the flood, no, but good question. So, and so let's move on even to the to the flood. So you could absolutely do excluding wind and have flood insurance, which frankly, especially her being in a flood zone, makes a lot of sense. I'm going into the password list. I'm pulling up Right Flood. That's primarily who we use for flood. And flood, to be clear, is defined as rapidly rising water over one or more acre or one or more properties. That's what flood insurance is. Okay. So if you have Hurricane Jennifer come along, and you know, they get a ton of rain and it just sits over us and there's standing water, that's coverage that you have for that. So I'm logging in here. I'm going to go new quote, click flood, not a business. Okay, again, very similar info that's going to be asked. So I'm going to put in Michelle Cole, Andy Cole. And I'm going to leave that out for now. I don't think that requires it for us here, just for sake of time. So a couple things too. Flood insurance is regulated by the federal government. It's going to be the same with any carrier. Now, we do have some carriers now that have come into the market. Traditionally, there was never any price difference because it was always run by the federal government. Flood insurance over the last several years has gotten not as competitive, or I shouldn't say not as competitive. It has not. They've taken a lot of losses and had a lot of claims, and they've continued to raise rates. This is at the federal level, so there are some other carriers that we can look at. A lot of times, and it will depend, but a lot of times the NFIP or the federal government insurance is still the least expensive. So here we click yes, we need to pull a flood zone. There's not multiple structures. Email me the zone determination, and that zone determination will literally tell us what flood zone they're in. Okay. Keep in mind too, just as we're talking a little on flood, so flood insurance, 30% of all floods occur in non-flood zones. And it maxes out about $450 a year. in cost. So I even recommend to people, even if you're not in a flood zone, it's still a good idea to consider. Your home is typically your biggest asset. There's a lot of, again, we get a ton of rain in Florida. I joke we're surrounded by water on all three sides. There's no mountains around here. We get more hurricanes than any other state historically ever. So to me, it makes a lot of sense for that small cost. Okay. So this is pulling through and pulling, obviously it is in a flood zone. Okay. This firm effective date is important. And what this means, you'll hear the term pre-firm and post-firm. And firm is basically like the date where this particular area started participating in the National Flood Insurance Program. And it's something that like literally happens county by county and area by area. If it is a pre-firm home, which means the home was built before this date, we do not need an elevation certificate. This is the only thing that really matters to us. If it was built after this date, so if this was like 1985, 1990, we would have to have an elevation certificate. We cannot quote it without that, but because of that, we don't need it, okay? So we'll go down, we'll click next. Waiting period, there will be a 30-day wait. So flood insurance has a 30-day wait on it unless it's a new loan or it's a renewal. And that means they already have an existing flood policy in place. Even if, let's say, they had flood with someone else, they could put flood with you. Because, again, flood is typically flood is flood. So let's say their flood insurance was with State Farm. Rate's going to be the exact same with us. Right? Flood's AM Best A-rated carrier, very good on claims. It's all they do. One of the largest flood carriers in the country. So those are the only times where you can have avoid that 30-day wait. Otherwise, we have a 30-day wait. Now, all this also becomes important because we are, only a few months away from hurricane season. So, if I'm anyone and I'm considering flood insurance at any point, I would definitely want it in place probably before, I would certainly say probably before July or August, okay? It's not a condo, so we'll put other not a condo. The construction date, again, was 1970. I normally just pick a month in the year. I don't worry about the actual year, the month. Hasn't been changed. Construction is based on date of construction. They're not a tenant. They mean they own the building. It's not a building rental. It's not a nonprofit. They purchased the policy or purchased the home that date. They have not had a prior policy at this point, and they're not applying for disaster assistance. Okay. So we'll go next. Then we'll say building is residential. Because keep in mind, we could do it for non-residential. We can do it for all sorts of things. This is the main house. It's not under construction. It is walled and roofed. It is not over water. We don't need additions and alterations. What percentage of the year? Blah, blah, blah. Okay, so they live in the house 80% or more. Not on federal property. Coverage for the whole building. Not state-owned. Just going to put the square footage in there. Okay, and it is asking me for this. What is it saying here? Include coverage for no. So we don't need the additions and extensions. That would be more for a condo. Okay, we don't have a flood zone certificate. Now, there are times where even if you're pre-firm, you could have an elevation certificate, and it may, and I quote, may help lower the rate. Not always. It really depends. And the garage is attached to the building. The garage area is 312. Put that it is finished, used for parking. Okay. There's no basement. It is not elevated. It's one floor. I'll put the replacement cost is $244. Put 240. I'll put 244 on the building. Contents, I'm just going to put 25. The max you can do is 250 and 100. And one slab design. Slab on natural grade. Okay. So now you're seeing the range of pricing here. Now, again, I do recommend higher deductibles. So if you look here, a $5,000, well, 5,000, 5,000. 5,000 would be $2,000 for the year. Okay, so you can see there's quite a range here. I'm even going to probably just screenshot that. You can always do Alt and print screen. And I'm just going to, that's right, my email. I'll do that later, but Alt and print screen will allow you to take a screenshot of something. Now, again, I do recommend to people where we can save the money, the higher the deductible, I would do it. Okay, and if they don't like that idea, they certainly don't have to. Okay, and now I'm going to click next. And we're getting very close to the very, very end here. We can wrap up in a minute. Let's see what this is saying here. Based on the information, private flood may be available for estimated. Okay, so what this is also saying here, to that point where I was telling you there are some other options, where there are some private flood options. Remember I was explaining that to you? So the system is literally saying, hey, you may be able to get private flood, but it's going to be, and it's already giving me an estimated premium, right? So that certainly doesn't make sense there. But that's just what that's saying. And then here we'll go Documents, and we'll view the quote, okay? So here we see here, we've got the building. Now, okay, I select the wrong, I thought I did 25,000, I see what that was saying. I only did 2,500 on the contents, if you recall that. So I'm going to go back, and that's what it was telling me a minute ago. So I'm going to click back here, and we're going to do 25,000 on the contents. The contents doesn't charge nearly as much as the building, so I mean, they still that only changed it a couple $100. Okay. So we'll go here, we'll click the document, and we'll save that. Now I will tell you, flood insurance, again, they pay us 20%. That is very nice. That is very high. That is, anytime you can get flooded is always a great thing because you can pick up 2 policies. And again, remember, you guys get your commission splits off of what the agency gets. So the agency gets, so again, on something like that, let's say the premium was $2,200 times 20%. That means the agency would get $440 on it, and you would get in your first year half. So you would get $220 off just that one policy, right? And then if we also add on, I mean, it's kind of a great example because if we add on, let's say the homeowners, and let's say that she did the one that was $3,100. Again, I just want to give you an idea of how this works. We get 12% from Universal, okay? So that works out to $372 to the agency. If I divide that by 2, that's $186. So if I add those 2 together, you would be getting $406 on that commission from this one client, right? So again, imagine you do 10 of those in a month. Now we're $4,000. Imagine I did 20 of those in a month, right? That's kind of how the magic of all this works. So we'll save the flood insurance proposal. I'll just put rate flood. Okay. And then any questions on the flood so far?
No.
Okay. Are you okay me emailing her and copying you on it?
Yeah, sure.
Okay. So then let me, what I will do, and again, I don't know, like I said, I've got a new, that's right,